So welcome to Financial Accounting. Today we want to interest ourselves with one of the financial statements, which is called the statement of changes in equity. Now, the statement of changes in equity is just like any other financial statement, because those that we are familiar with is the statement of financial position. Then the other is the income statement, which is the statement of comprehensive income. Statement of comprehensive income. Now, the statement of changes in equity, as it is indicated here, is looking at how equity has changed over time. Now, equity items are recorded under the statement of financial position. I do believe that we remember that if you're doing your statement of financial position, you have your assets, you have your liabilities, and then you have your equity. So we know very well that as part of equity here, there are several items. And I just remind you of those items. We have the share capital, we have the share premium, then we have the preference share capital. Sometimes we can also get a classification of ordinary share capital. I went through the details of these items in the last video. If you've not watched it, it's good you check it out. So we also have general reserves and more other items. And of course, not forgetting an item called retained earnings. So these are our so-called equity items. Now, at the start of the year, we usually have these values, the balances of these values of these so-called equity items. We usually have these balances, and usually these balances are picked from the balance sheet of the previous period. Because you know that if we have, let's say, a balance sheet for items for a period ending 31st December 2021 or 2022, in the next financial year, those will be the opening balances, basically. But as a business, at the end of the year, you have what you call ending balances. You have balances that are represented usually in the trial balance. Your trial balance, or even your trial balance basically is showing that share capital, if you started with 1 million, share capital has now increased. You now have, let's say, 2 million. And why it could be the increase here, it could be maybe you issued new shares, okay? You issued new shares. You might have an aspect of share premium. We said share premium goes hand in hand with share capital. When you issue shares at a premium over and above the nominal price, then you have a share premium. So you might have started with, let's say, 200,000. And at the end of the year, it is now at 300,000. So ideally, there is a change in equity. There is a change in these equity items. Now, the statement that helps us demonstrate this or represents this change in equity is what we are referring to as a statement of changes in equity, as it is called. So a statement of changes in equity in terms of format. Like I said, its interest is look at the different equity items. So you ask yourself, what equity items does the business have? Now, not every business will have a share premium, especially small businesses, businesses that are not, let's say, listed on the stock exchange and so on. Some businesses do not have general reserves. Actually, for businesses that let's say small, they'll have share capital and maybe retain earnings. At least this is a constant. A business will have capital and they will also have a retained earnings. But other than that, the other things appear differently on each of the each business. So when you're doing your statement of changes in equity, you first to understand what are some of those items that are within the equity items for such a business. Okay. Now, when you know that, that means even on your presentation, you'll be able to look at those different equity items. So, like I said, we usually have our headings for the different columns usually start with the equity items. So I'll have share capital. Then I'll have, let me start with the mandatory ones. I'll start with retained earnings. So you can see that all this that I've put here is now written in a vertical format with respective columns. So you can see I'm going to first do something like this. So it's more of a table, okay? It's more of a table. I want you to see. So we usually have a details column here as our first column, okay? Because this is where we're going to record the different things. And then we now list the different headings. So I can now come and pick my general reserves and put them there. I can now also go and pick, let's say, my share premium and also put the share premium there. Now, any other that might rise up is also included there, okay? Now, let's say these are the items that I have. These are 4 items. In case I also have preference share capital, maybe it can also be there, but we can have this for now. So this is what I have. Okay. So usually after you've listed all your items here, you then have a total. Usually the last column is total. Whatever you're going to have, you have a total at the end of the day, okay? Now, under statement of changes in equity, the first thing that is written here is the balance brought down. Balance brought down. This balance is brought down is usually the balance as per the last financial statements of the previous year. Or sometimes the examiner will give you the beginning values. Okay? So the balances as at the start of the year are the ones that appear here. So let's say share capital, we started with 1 million. Just like the way I was trying to say here. So let's say we started with 1 million. And then retained earnings, okay, share premium, let's say we started with 200,000. Retained earnings, maybe we started with 450,000. And let's say here, general reserves, we started with 800,000. Preference share capital, maybe we had 300,000, okay? So at the end of the day, you have your total here of your equity as 2,750. So 2,750 is your equity balance as at the start of the year. Now, we're now going to look at the changes. What brought the changes? For example, you've seen me here say that my opening balance of share capital was 1 million. I've ended with 2 million. What happened in the process? So we're now looking at the changes. So your question is to ask, how can share capital change? Share capital changes when you issue new share capital. So the examiner can give you a statement, for example, and say, on 1st Jan, issued share capital of 1,000 shares at 200. Let's say these are US dollars, whose normal price, this is per share, whose normal price is, let's say, 150. So these shares, as we can see, each of them is at 200. So the total proceeds is 200 times the 1,000. But they are telling us that the share price is 150, but they're issuing it at a premium. Okay? So my share capital is going to be like this. I'm going to get the 1,000 multiplied by the normal share price, which is going to give me this. This is 150,000. So my share premium will be still the 1,000, but this time I'm going to get the difference between 200 and 150 to give me the premium on those shares. And I'm going to get 50,000. So ideally, the person who bought these shares paid us 200,000, but the 200,000 is distributed into two. Part of it is actual share capital, which is at the nominal price, and the other is the share premium. So I'll come to here and say issue of new shares, under share capital, I'll come and record my 150. Under share premium, I'll come and record my 50,000. So that is what I'm going to do. Okay? This is what I'm going to do. Now, after I have done that, I'm now going to ask myself, how about retained earnings? How did they change? Now, retained earnings, they change by either profit or loss for the year. So in case I have a profit, this is net profit, and this usually comes from the statement of comprehensive income. So which means that this statement of changes in equity is prepared after preparing the statement of comprehensive income, because you need the value of the net profit for the period. So in case I've gotten my profit for the period to be maybe that one, this is 1 million, means that I have, that's how my retained earnings have changed. Okay. Now what I do, let me just also now give you an example of general reserves. Now, general reserves, we say that this is money set aside from profits for certain reasons. So of the 1 million we have made, management may say that we are going to transfer 200,000 to cater for a purchase of fixed asset. So I'll come and put 200,000 here, but this 200,000 is coming from retained earnings. Usually reserves pick from retained earnings. You're basically saying I'm not going to split this money, but I'm going to pick from my retained earnings. Okay. So what that means is after I have done this, okay, I'll get my totals this side. So my totals this side, as you can see, is that. Okay. This I add this column, everything. This one I also add, this one I also add. Now, I'll also come here and get my total. So there's also usually a total down here. So I'll also add now every column as I have done for the rows. So this will give me 150. This will give me 1250. This will give me 1 million. This will give me 250. This will give me 300,000. There's no change in the preference shares in the period. Now here is the thing. The total here, okay, should match this total. As you can see, when I add this, I get 3,950,000, and when I also add this, I also get 3,950,000. So I now have my statement of changes in equity for this company. As simple as that. So this is what it meant by, so it's as simple as just looking at the different equity items and determining how these equity items have changed over time. And yours is to know each of the equity item, how does it change? Shares change when you issue new shares. Retained earnings change when you either make a profit or loss. In case this was a loss, it means this was going to be net loss. So this would, let's say, now a negative. So this is how it was going to basically be. Okay. Yeah. So I hope that this is helpful to you. Let's see how it all goes.